All right, folks. Brandon Chapman today. It's another edition of the Theo Night Monday video. Good to be with you today. Interesting day in the market as we basically engineered a stick save. So the title of today's session is the Nasdaq engineers a bullish stick save. If you look back at the data, I mean, the last correction that we've had in the Qs or the Nasdaq, for example, we'd literally have to go back almost 2 years' time to this point in time right here. We're down 10%. Finally came out of it in early April. So it's really been a very long time since we've had any sort of correction in the Nasdaq. We're talking about 10% plus as a correction. So when you look at the move so far, you'll see from high to low, or we'll say from high to that low. I'm gonna have to dial it in here just a little bit to see it. We're down about 10% today. So we entered kind of that correction territory, but we were able to rally off of it and kind of save the end of the day that 10% correction territory. You know, we're about 10 minutes before the market close. You can see we're basically trading at the lows from the last couple of months here. We're trading in a range between 405 and down here to around 378. It's about where we're trading today. So the question is, for the Nasdaq, do we rise from here, or do we trade lower yesterday, taking out the lows and putting us squarely into correction territory en route to a potential bear market of 20% plus? So far, traders say we're able to engineer a stick save. We'll see whether that's able to continue. JPMorgan's Jamie Dimon talked about their outlook of potentially 4 rate increases this year by the Federal Reserve. If we go over here to the product depth / I think it's ZN. That's not. No, I just do this. I don't know why I can't remember it. 30 day. Where are we at here? There we go. There's no numbers. That's why it messes me up. Anyway. All right, so let's take this off. As you look at what's currently being projected. So we're looking at here like the March time frame. We're about 99.8. We're basically starting to price in a quarter point rate increase, a certain probability of a quarter point rate increase for March. You look out towards December of 2022, you'll see down here about 99.1, 99.12. What does that mean? As you approach 99, that's a 1% Fed funds rate. So right now we're pricing in the potential that we may even have a small probability of 5 quarter point rate increases this year. We're definitely pricing a very high probability of at least 4 rate increases this year, basically mirroring the expectations that Jamie Dimon proposed today, head of JPMorgan, JPM. Now, as you look at banks, let's bring up JPM today. It kind of gapped up and faded. If we look at, for example, the S&P 500 sectors and their performance today, what you'll see is that ultimately healthcare led, surprisingly, because there were some wicked moves and some good stocks like a Cardinal Health dropped dramatically but rallied off of the lows, and other healthcare names out there. However, companies like Bristol Myers Squibb were higher today. Let's try this again. BMY up about 3.6% on a stem cell research and license agreement with IPSC. IPSC did not see the same kind of movement, but again, this is a smaller company. It was up 12%. It looks a lot smaller because it is a lot more volatile. So some interesting trade there. And BMY also saw some significant option activity at the 67.50 strike. So we come in here to the option chain. We go to the February's expiration. You'll see 12,000 contracts traded out here at 67.50, mostly bought. And again, provides a little bit more upside here as we start to look at the price, retesting its prior highs in the 65 to 70 range in BMY. Now, as we look at some of the carnage in technology, although we've recovered off our lows, XLK, for example, again, did recover nicely off the lows. You look at funds like ARK, for example, reflecting some kind of that technology, high earnings multiple type stocks as they're mostly invested in, meme stocks, etc. Down marginally, but again, recovered off the lows of the session. There were some bearish trades being put today in ARK in that 28 Jan expiration. Aiming for the downside here is 79.22, 69.22. Again, we're pretty oversold in the near term. This has got 18 days left, but looking at what, 69.22 to the downside. Now, again, you might say that's a hedge. Yes, it might be, but again, it still reflects the potential or expectations we might get there. Now, what we got to key off in terms of market strength and particular technology or high earnings multiple strength is we got to look at what's going on with the 10-year. The 10-year today, was up a bit more earlier. We faded off the highs. We're maybe running out of some gas here. So as we're approaching the kind of that 1.8% threshold, again, I would have thought we probably would have got stuck a little bit earlier. But anyway, as we look at kind of this weekly data, I'm not sure why it's not giving me. Let me go up 3 years. We're kind of getting back in the neighborhood of where we were late 2019 in terms of yield. We're still in the territory of March 2021. Again, this is a pretty significant area of resistance. If yields can fall, it may provide some near-term relief. And that may be why some of the rally we saw in XLK off our lows, or in particular QQQ off its lows and kind of holding back that bearish breakout in its share price here. As we talk about bonds and we think about some particular ETFs out there, AGNC, the rising bond yields are certainly negative for mortgage-backed securities. As the higher mortgage bond yields, if you have some originated lower yields, they're not going to be worth as much. So there's some price pressure there. Also, the possibility of the Fed raising rates may raise borrowing costs. If you look at products like HYG, that's reflected high yield credit. We got a nice intraday bounce today. We did sell off pretty hard towards that 85.36. In other words, that November support level. But again, as we think about AGNC, there's a lot of potential risk if the Fed raises rates, if we start to see mortgage yields start to go up, prices down, it will affect their portfolio, borrowing costs as well. They're heavily leveraged. So as we've been consolidating here, a look that we saw today, or a trade that was today on AGNC, it was for an 11 Feb expiration, 5,000 contracts against 2,500. Some bearish put activity coming in at 15, basically expecting it to break 15, which is its support level, expecting a continuation of the downtrend. This is a product the long term should trend down over time. We recovered off those 2020 lows back to 2020 highs or near 2020 highs. It only makes sense this may continue this downward progression. You may look for a breakout below 15, but again, it's an indication of some expectation for some bearish movement here. Another stock, Uber. This is one that's had some very positive activity stemming back here, and I believe we talked about this Monday video as well. The stock is finding some support today, maybe some opportunity for this thing in the near term to trade between $44, maybe $46 in that range. And today's trade, it was the 11 Feb out at the 45 calls that were being bought today. So providing an indication that maybe have a shot of running back towards 45, which was that high there, maybe pushing towards 46. So again, the strength today in Uber, the fact that we did close above yesterday's high, although we did put in a lower low today, maybe a possibility of rallying back towards 45 in the coming days. On the technology front, again, if yields start to come off the highs, does it help companies like NVDA? Of course, you've heard about the chip shortage. We're struggling to produce vehicles, etc., etc. But again, did finish slightly higher today, held on to its support. And as you look at the trade tab here, we're talking about a 14 Jan. So that's a this week expiration. See a lot of activity out here at the 280 strike, for example, and it kind of spilled out to the 290 and 300. Again, you can kind of see just some scaling across some various strike prices extending back to the prior high. So if we get a vigorous rally, NVIDIA might be poised to do that. And as you look at the implied volatility, we are rising modestly as we start to get out towards those strikes out here. So some opportunity if you're trying to take a speculative trade, buy a lower, sell a higher. And maybe if we can push towards 320 this week, that could be a very, very big winner relative to the cost, although it is a low probability trade. Again, maybe take an example of maybe like a 300, 320 out here Again, not costing you a lot, less than $1, maybe like 40, 50 cents, and huge potential upside if you're right. And we do get to 320 this week. Another one, AMD today. So AMD, again, very similar at support, rally to close near the high, or to trade near the high of the day today. Again, you look at the 14 Jan expiration, the 135 strike in AMD, or 130. Yeah, so 130 down here. Sorry, that's the 130 strike. So it's almost moved up today. And even some popping out there to the 135 strike. So again, some near-term expectation. Could we get to 135, 140? Absolutely, if we find some support and see a rally. But again, some trade today pointing to some upside here. Finally, we're going to wrap up with KBH. So last week, I worked up my magic formula watch list of companies that have good valuation, high earnings yield, high return on capital. A lot of home builders came up on the list, and I believe KBH was one of them. And it's interesting today, we tested support, we held it, formed a lower low from yesterday, even traded through the low there. We did rally towards the high of the session. Now, again, we have earnings coming up on the 12th, but a lot of times you get these negative sell-offs here. If the earnings come out in line or maybe slightly better, there's the potential for KBH, maybe even jumping back to 45. Now, again, today the trade was at the 42 strike for a February expiration. But again, 12,000 contracts traded. You look at the option statistics, and there's the bell. Most of it occurring between the market, but if you look at between the bid and ask, it certainly would imply there's more of a trading at the ask, meaning call option buying for that 42 strike. So anyway, giving you some upside expectations toward 42, maybe even giving an indication leading up to the earnings that's coming up this week on the 12th. Anyway, folks, I hope this discussion's helped you. Again, you could look at oil and other commodities out there. Not much else really went on. I mean, gold and oil really didn't move a lot. Gold may have a shot if the dollar weakens here to maybe catch a rally towards, maybe 1840, maybe 1880 in the coming weeks. But this very seasonal trade is starting to wind down right now. Anyway, it's been a pleasure being with you. We'll catch you back next week on the Theo Night video. Have a good one. Thank you.